Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. It's Tuesday, September 23rd. There's two things I want to talk about tonight. First, I want to recap our strategy, what we're looking for to happen. And the other thing I want to talk about is how technically unintelligent the market has become. First, let's do our recap, okay? 4 days ago, the market puts in a huge reversal day. Typical classic reversal day, good sign that it could be a bottom. The next day we have a big follow-through, which is another key sign. Now let's back up to the day before the key reversal. We had a Joe Granville indicator fall into line, which says anytime there's 500 or more new lows made on the New York Stock Exchange in any one day, that the low is probably in or close to being in. It's a washed out signal. Well, not only did we have 500, we had 1,000 new lows made that day. And my other indicator that I need to go along at the bottom is we need to have a lot of fear. And there was plenty of fear. There's been fear around for a while, but that day in particular might have been the day that Fannie Mae was done, or one of those bankruptcies. So there was a ton of fear around that the entire financial system was going to melt down. Okay, so there's good reason to believe that low was put in, but what's missing, and it's the most important ingredient of the whole entire scenario, is that the bullish setup. We did not have a bullish setup. So I felt we were going to pull back after the second day rally. I thought if we had a small pullback that there was a chance we could build a reverse head and shoulders, which would be a bullish formation, and we could break out of that and move on up. The second scenario was if that didn't form and the market pulled back deeper, that we may have to go down and retest the lows to make sure that they're in, and then we could rally from there. Well, the second scenario seems to be more that played out, because now the market's pulled back further than I would have wanted to see, or it always does. But there's no more wiggle room. There's a tiny little bit of wiggle room it can pull back to, but not much, And we need to get a rally, and we need to get a rally soon, like tomorrow. Now, I know already while I'm making this video that the market after hours is already up 130 points because Mr. Berkshire Hathaway made an investment in Goldman Sachs, and carries a bullish sentiment with that, and so that's why the market's up. But even if I didn't know we were going to have that rally, we need that rally for my theory to work out, so to speak. We need to put in a bullish formation. Now, just because we're going to rally tomorrow doesn't mean the formation's in yet. It's going to take days. We'll go over that in our final chart. I'll show you when we go through the indexes that what we're looking to happen. The other thing I want to talk about is how technically unintelligent the market is, and I believe it's because of the short sale rule. The more I find out about this, I find out there are many big players who have these trading models that encompass short selling, and if they can't sell short, they can't set up their trading model. So they basically have pulled out of the market. Then there's program traders, the guys who buy the indexes and sell the stock shorts. They can't do that either. So they're out of the market. So now the market's become totally technically unintelligent. What do I mean? I see a bullish setup, a pattern that's normally worked in the past many times, all of a sudden starts to work, then out of nowhere it gets aborted. Other stocks breaking out to new highs look like they should continue straight up. 2 days later, they turn around and they look like they put in a bearish formation. So unusual technical things are happening, and this is why I cannot highlight any new stocks with any kind of confidence. Watching these patterns get aborted all over the place. And I really believe it has to do with the players who've pulled out of the market. I didn't realize what kind of effect that this rule was going to have, but now I'm starting to see it. So until all the players get back, and until the SEC comes to their senses, until I start to have more confidence that the technical patterns are going to hold and work, it may be a while before I highlight anything. Okay, so let's get to the indexes, and I'll show you exactly what I'm talking about. So don't go away, I'll be right back. Okay, we're looking at the Dow. This is our reversal day. I believe the day before is the day we made 1,000 new lows. Ton of fear this day. Big reversal day, outside reversal day, closes on the high. Good follow through the next day. That's part of the ingredient. Then we need to get a pullback. I thought we'd get a little pullback right into here, and then we could form like a reverse head and shoulders pattern. Like this being a left shoulder, and then what we need is a right shoulder. That would be a bullish pattern that we could break out of. So we've pulled back more than I wanted to. It distorts the look, but maybe they want to test these lows. Anyway, we need to get a rally. So this is our target. Once we break through this high here, once we break through this, we'll be off to the races. But it's going to be a number of days backing and forth, and then we're going to go through. If that's how it has to set up. But we still do not have the last ingredient, which is the bullish setup. We're working on that, I believe. Let's look at the transportation average. All right. It's not bullish. It's more bearish than bullish. The only bullish thing I can say is that it continues to hold the support area. Russell 2000. Rallied all the way back to the high. Pulled back into support. Needs to do a lot of work in here. This is our target. We need to break out above this high, and once we do, then we'll get a good strong market going. SPY, similar, very much similar to the Dow, pulling back, testing the lows. This is our target. Once we break through this, we'll be in good shape. But it's going to be days of backing and forth in here before that happens. QQQQs. Same scenario, pulls back further than I would like to have seen, hasn't violated the low. We've got to get a rally out of this area here. We're down further than makes me, I'm not comfortable with that. So we need to come out of here quickly. If the market's okay, we're going to come out of here quickly. And we may back and fill for a few days, but this is our target. We've got to get through this. A breakout above that should take us higher. Okay, let's take a look at Apple. Why I like to look at. I believe it represents the market. It's highly owned. A lot of people own it, and it's well run. And anyway, let's start from the beginning. March 15th, I come online. I recommend the purchase of it. 125. I thought it could get to 200, which was my target. Was basically this pattern up in here. So we get the 190 area. Okay, breaks down, kicks back. I recommend the short. I had envisioned it coming all the way back back down to this target. This was my target, this whole pattern back down here. Now, it took a lot longer than I thought, but it's finally there. And my thinking was, at the time, when this stock gets all the way down to this pattern, that the entire market probably will also be washed out also at the same time. Because it's going to take a tremendous amount of force or negativity to get this stock down, because this is one of the darlings of Wall Street. So to get it to come all the way down there, things would have been pretty bad. And it's there. What we're missing, though, same in the Dow, is we don't have this bullish setup over here yet. So this has to do a lot more work back and forth before any kind of bullish setup is set up, before it can break out to the upside. It has to look something like this. Okay, so that's why that's one of my indicators, Apple. Okay, so that's my view of the market. Until tomorrow, this is TK signing off.